Could the next massive crypto bull run be sparked by geopolitics? It sounds crazy, but a group of nations you've definitely heard of might hold the key. We're talking about BRICS, that's Brazil, Russia, India, China, and South Africa. They're making moves that could completely reshape the global financial system, and that has huge implications for Bitcoin, Ethereum, and your favorite altcoins. So, stick around, because in this video, we're breaking down exactly how the expansion of BRICS, their push away from the US dollar, and even a potential new BRICS currency could be the unexpected catalyst for the next crypto explosion. First, let's get on the same page. What is BRICS, and why should you, a crypto investor, even care? Formed in 2009, BRICS started as an economic alliance of major emerging economies. Think of them as a club of nations, wanting a bigger say in how the world's money works. Originally just for countries, they added South Africa in 2010, and just recently, they've expanded, inviting countries like Saudi Arabia, the UAE, Iran, and Egypt to join. This isn't just a small club anymore. It's becoming a major economic bloc that represents a huge chunk of the world's population and GDP. Their main goal? To reduce their reliance on the US dollar. This is a concept called de-dollarization. For decades, the dollar has been the world's reserve currency. Oil is priced in dollars. International trade is settled in dollars. You get the picture. This gives the US immense economic and political power. The BRICS nations are saying, hey, maybe we should have an alternative. They're exploring ways to trade with each other, using their own local currencies. And they've even floated the idea of creating a new, common BRICS currency, or a shared payment system. Now, imagine this actually happens. Trillions of dollars in global trade could start moving outside the traditional US dollar system. This would be one of the biggest shifts in global finance in a century. When a system this big starts to shake, people and even nations look for safe havens to store their wealth. Historically, that's been gold. But in the 21st century, there's a new player on the field, digital gold. And that brings us to Bitcoin. Bitcoin's core design makes it a powerful hedge against currency debasement and inflation. It has a fixed supply of 21 million coins, it's decentralized, and no single government can control it or print more of it. As trust in traditional fiat currencies like the dollar wavers, the appeal of a neutral, borderless asset like Bitcoin could skyrocket. Think about it. If major commodity-producing nations within the expanded BRICS bloc, like Russia and Saudi Arabia, start seeking alternatives to the dollar for their oil and gas sales, where does that value go? Some of it could flow directly into assets that are outside of any single nation's control. Bitcoin is the prime candidate. We're not just talking about individual investors anymore. We could see central banks and sovereign wealth funds starting to diversify a small portion of their reserves into Bitcoin. Even a tiny allocation from these massive players would send shockwaves through the crypto market, potentially triggering a demand surge we've never seen before. This macro driver aligns perfectly with crypto's own internal cycles, specifically the Bitcoin halving every 4 years. The reward for mining new Bitcoin is cut in half, reducing the new supply entering the market. Historically, the year following a halving has been a bull market year. The last halving was in 2024. If the de-dollarization trend accelerates around the same time that Bitcoin's new supply is shrinking, you have a classic supply and demand squeeze. Less new Bitcoin available, and potentially way more demand from a world searching for a reliable store of value. It's a recipe for a parabolic price move. So, what about the rest of the crypto market? A rising tide lifts all boats. A massive surge in Bitcoin's price and legitimacy would almost certainly drag the rest of the market up with it. Ethereum, as the foundation for DeFi and smart contracts, would benefit immensely. As capital flows into the crypto ecosystem, much of it will find its way into DeFi protocols, searching for yield, boosting the value of governance tokens, and increasing the demand for Ethereum as gas. And don't forget the altcoins. In a bull market, investor appetite for risk grows. People take their Bitcoin profits and rotate into more speculative altcoin plays, hoping for those 50x or 100x gains. Projects focused on real-world asset tokenization, decentralized infrastructure, and cross-border payments could see particular interest in a world where BRICS is building an alternative financial system. A BRICS payment system could even, hypothetically, be built on a public blockchain, which would be a game-changer for adoption. Now, let's be realistic. This isn't a guaranteed home run. There are significant risks and hurdles. First, creating a unified BRICS currency is incredibly difficult. These countries have very different economies, political systems, and priorities. Agreeing on a monetary policy would be a nightmare. It's more likely they'll focus on a common settlement system for trade first. Second, regulation is a huge wild card. The US is unlikely to give up the dollar's dominance without a fight. We could see regulatory crackdowns on crypto if it's perceived as a threat to the existing financial order. Geopolitical tensions could also escalate, creating market volatility that scares off investors. So, while the long-term trend looks promising, the short-term path could be very rocky. The timing is everything, and these global shifts take years, not months, to play out. So, how should you position yourself? Remember, this is not financial advice, and you must always do your own research. But here are some strategies to consider. The most straightforward approach is simply holding Bitcoin as a long-term store of value, your digital gold. This is the core thesis. If you believe in the de-dollarization narrative, having a core position in BTC makes a lot of sense. For those with a higher risk tolerance, you could look at Ethereum and other leading layer 1 blockchains. They are the infrastructure on which a new decentralized financial system would be built. You could also explore altcoins in sectors that would directly benefit, like decentralized physical infrastructure networks, or DPIN, and real-world asset tokenization, or RWA. These are the projects aiming to bridge the old financial world with a new one. But it's crucial to stay informed. This isn't a set-it-and-forget-it situation. You need to follow macroeconomic news, pay attention to announcements from the annual BRICS summits, and watch how central banks are managing their reserves. The link between geopolitics and crypto has never been stronger. Understanding this macro picture will give you a significant edge over investors who are only looking at charts. In conclusion, the rise of BRICS and the de-dollarization movement represents a potential paradigm shift in global finance. While the dollar's reign won't end overnight, the cracks are beginning to show. For the crypto world, this isn't just background noise. It could be the primary catalyst that fuels the next great bull run, creating a wave of adoption and price appreciation that dwarfs anything we've seen before. The stars seem to be aligning with the Bitcoin halving cycle, creating a powerful narrative and a potential super. What do you think? Is the BRICS narrative the key to the next crypto bull run, or is it all just overhyped speculation? Let me know your thoughts in the comments below. I read every single one. If you found this analysis helpful and want to stay ahead of the curve on the biggest trends in crypto, make sure to hit that like button and subscribe to the channel for our weekly market updates. And for real-time insights, be sure to follow us on X and join our Telegram community. The links are in the description. Thanks for watching, and I'll see you in the next video.